Guys, before we get started and jump into the content, a couple of quick announcements. Number one, quick shout out to my partners here at WooX. If you guys have been following me, you know that we've been doing a MacBook Pro giveaway, as mentioned in my last video update. The winner has been chosen for the MacBook Pro, so Woo has gone ahead and emailed whoever that winner was to claim the MacBook. If you signed up to Woo using my ref link and followed the instructions in the giveaway post from the last video, that means you were entered to win. A winner has been chosen and has not yet come forward. So as stated in the original post, if the MacBook is not claimed within 7 days, a new winner will be chosen. That was on November 5th that I tweeted this. So we have 2 more days for that winner to come forward. If that winner doesn't come forward, a new winner will be announced. But I want to make sure that if you're seeing this and you haven't yet checked your email to see if you won, if you followed the instructions in the giveaway, please do so. It's a free MacBook, so I don't think anyone wants to miss out on that. So again, just a reminder to double check your email. Make sure you haven't received an email from Woo. I actually shared the user ID here. So if this is your user ID, you are the winner. You can check your user ID on your WooX account. And if this is not your user ID, no worries. Good luck next time. I do these giveaways quite frequently with different items. So again, guys, just a reminder to check your email. If you are this user ID, you've won, please reach out to me or please respond to the email to claim the MacBook. If no winner reaches out in the next 2 days, Woo will draw a new winner, and I'll post that on my Twitter once more. So please pay attention to my Twitter if you have signed up using my ref link. You could be the next winner if this winner doesn't come forward, guys. With that being said, as always, if you guys do want to support my content, you can sign up for Woo using my ref link, which will be the pinned tweet in the comments in the video below. With that being said, guys, the second announcement that I wanted to make is that I actually recorded the video that you're about to see last night. I wasn't able to get it done editing until today, so there's a little bit of a delay between when the recording was done and when you're seeing it now, about 24 hours, or I should say 12 to 24 hours. So a couple of things have changed in that time. The first is that the BONK trade that I discussed in the video actually went up and hit my take profit level overnight. So that trade has been closed for profit, as I shared on Twitter. And the second change, obviously, is Bitcoin has moved up a few percent since recording. Other than that, nothing has changed. Everything still stands. So again, without further ado, guys, enjoy the video. Yeah, and let's dive right in. Crypto here with a new Bitcoin video update. And this one I'm going to talk about why I remain cautiously bearish here at the highs, despite us having broken this series of untapped highs that we discussed in my last video update. We'll go over the logic behind what I'm seeing, the arguments for it, and we'll just talk about some things in general, because I've been getting a lot of hate and anger on Twitter for not flipping bullish here. People are actually getting upset that I have an opinion that differs to theirs. And it's usually an indication of sentiment, because the reality is on Twitter, you have 1 to 5% of people there on crypto Twitter, as we like to call it, that actually trade. The other 95% are typically spectators or longer term investors that are holding spot bags, and they don't actively trade. Naturally, then their bias is almost always bullish, and they kind of frown upon or look down upon people that are short term bearish. Almost as if we being bearish will affect the market and bring it down, which obviously we know is nonsense. But there is a prevailing sentiment that bullish is good, bearish is bad on crypto Twitter. And so I've been getting a lot of comments from people that don't actually trade, these markets daily, telling me why I'm wrong, or telling me that I'm being stubborn, or telling me that I have an ego issue for simply disagreeing with them, which is kind of strange, but in the world that we live in on crypto Twitter, that's kind of how it goes. Never mind that I back up all my arguments and explanations with data and logic, but for some people, if you don't agree with me, you're wrong, and that's just how they see it. So in this video, I'm going to try and make it very clear as to why I am saying the things that I'm saying here. And I made a tweet about it. A lot of people either ignore the tweets, or don't see them, or are willfully ignorant about the tweets because they continue to repeat the same stuff and demand that I admit that I'm wrong without looking at my updates or context of things. But I'll just go ahead and we'll jump right into it, guys. We'll talk about this from different perspectives. I'll talk about the bullish case in case I'm wrong about us potentially forming a deviation here. So prior in my last YouTube video, recall we were looking for us to make a lower high below all these untapped highs. And the logic behind that was that I believe that we were saving all these untapped highs for a later breakout. Why? Because if we had avoided taking these highs, and if price made a lower high, came down, and then ripped up, and we kind of what you call like saved this liquidity for that ultimate break, it would have been very explosive, very bullish. And so my expectation was maybe there's a chance that we're building up this liquidity for a much larger break of it down the road. Again, to be clear, and as I've said for literally months, my high time frame bias share remains bullish, meaning irrespective of me looking for a correction here, the ultimate outcome of this range range would be at the end of the day a break to the upside in a very aggressive bullish way for the move to 100K plus. That never has changed, and that still hasn't changed. But I had expected that we would save these highs for that ultimate impulsive move to the upside. And what happened over the last couple of weeks is we ended up breaking those highs. And as we broke those highs, people jumped in and said, your idea has been invalidated. Why aren't you flipping bullish? You're refusing to admit it. You're stubborn. It's your ego. You just want to be right. Guys, I've been doing this for 7 years. And the last thing that I want is to be wrong as we climb up. It gives me no pleasure to be incorrect as I see price moving up, right? If I think that we're going to be coming down, it does not benefit me to remain bearish as price moves higher. If I'm wrong about being bearish here, what that means is that we're going to go to 100K, that we're not going to go below 67 to 68K. We'll talk about the level invalidation here in a bit, but it means that we will not go below a certain level, right? We can mark it off right here as this level here, but I'll go into more nuance. Point being that if I'm not flipping bullish now, I'm going to be forced to flip bullish higher at some point. The higher that I wait to flip bullish, the less good it looks, right? People want to be on the right side of the move. The sooner that you're on the right side of the move, the better. In no way, shape, or form do I like to be bearish here when price is moving up. That's not my goal. It doesn't look good for me. People talk shit about me every day. It's not something that I enjoy doing. At the same time, it makes no sense for me to flip bullish here because random anons on the internet that don't actually trade tell me I should be bullish. That's not going to work. I need to see what I want to see to flip bullish because it doesn't benefit me or anyone else if I flip bullish here because of pressure and then we dump the next day. We broke 71K right here and then we proceeded to drop down to 66K. Once again, if people wanted me to flip immediately bullish on a break of 71K because we broke that level, then I would have flipped bullish at the local highs before we dropped $5,000. This is a very volatile market, so I'm not in a rush to flip bullish here just because people think I should. Rather, I'll wait to see what I want to see, and if I see it, I'll flip bullish, and if not, I think there's a decent chance this is a deviation above the highs and we're going to see a massive correction. In any case, I'll make money either way because I'm a trader, and so I'll trade a break if I see a trade opportunity. Like I said, when we bounced down here to 66K less than a week ago, I longed some alts. Those alts are in profit. I took some profits. I have my long on BONK still open, but there's ways to make money here irrespective of if you jump in right away or not. With that being said, guys, let's take a look at the tweet that I shared that kind of explains why I didn't flip immediately bullish on this break of 71K. We'll go down to the daily time frame and you can see this level right here is the level I would have liked to have stayed below. And I said if we break above that level in an impulsive manner that I'll flip bullish. We ended up breaking above that level, but not in an impulsive manner, so I didn't flip bullish. And what followed again was that $5,000 move to the downside. We've now broken back above, but here is the explanation. And I think this kind of sums it up very well. I did think a break of 71K would be bullish, as I assumed that we would not break those highs until we saw our next impulse to the upside to ignite the rally to 100K plus. Context is important. Instead, we broke the highs in a corrective manner with record high levered longs within our range and with spot fading the move. Impulsive PA is what we get with sustained moves to the upside period, perp driven moves, etc., etc. You break the range highs without impulsive PA and a massive ramp in levered longs. Be cautious. I wish it was as simple as break X level and we are bullish. The reality of trading is that there are fake outs, deviations, and when you see data that suggests a specific move may be prone to that, you acknowledge it. So it's usually not break X level and we are bullish, it's break X level in Y context and we are bullish as long as Z level is held. Most people here don't actually trade over, so I'm not surprised that this nuance is lost on them. At the end of the day, if you are bullish here, I've made it very simple. Long retest of 65 to 69K. I've also said I'm not interested in doing that at the moment because of what I'm seeing on my end. No one is forcing you to do anything. If you don't agree with me, that's fine. As I've said, if you disagree with me, you long 65 to 69K. I tweeted this on October 29th. Okay, Bitcoin was trading at $72,000 on October 29th when I tweeted that. And I said, if you are bullish and you disagree with me, you long 65 to 69K. Where did we drop to after that? 66.7K. Where if you longed, we moved up, you're good to go. I didn't long Bitcoin here. As I said, I wasn't interested, but I did long some alts. Like I said, I've shared those on Twitter. Simple as that, okay? So if I'm wrong, then this was our bottom. If I'm right, we're going to break this here in the coming weeks, okay? That's pretty much it, guys. If we saw this break with an impulsive move, I would have been more bullish. We didn't get that, okay? So that's why I hesitate to flip bullish here. Now I'm going to show you guys why I believe that this is essentially still a fake out. We've climbed higher than expected. Like I said, I wasn't expecting us to go this high. So people that keep saying, admit that you were wrong. I've admitted many times I was not expecting us to go this high. That does not mean that I'm going to throw out my scenario if I'm not seeing the criteria that I want it to be met. It's as simple as that. Why do I think that this is still a fake out? I want to share with you guys something. Again, I've been here for a long time. I've seen a lot. And many times when I find myself in this position where the entire world is screaming at me that that I'm wrong without any sort of logic to back it up or without sharing their ideas, because most of them don't have ideas, I've ended up being right. And so another instance that comes to mind, back here in 2021, December or November of 2021, some of you may remember this, those who followed me for some years, those who have not, I actually posted a YouTube video, which is on my YouTube channel to this day. I don't delete my YouTube videos, whether they're right or whether they're wrong, they stay up there. So you'll find my YouTube videos talking about instances where I was right, and you'll find some that talk about instances where I was wrong. I have no shame in that. Traders get things wrong all the time. It's part of the game. Nevertheless, those of you who've been following me for a while will recall that back here in 2021, at these highs here at $64,000, when we broke the prior all-time high, I said that this move up was not impulsive, that this move up was a corrective move to the upside. Therefore, I expect that we are forming one of two things, okay? And again, you can go watch the YouTube video if you want to see when I called this. I said one of two things is happening here, okay? The first is that we're forming what I like to call a running flat, which is when we take these highs, it's a fake out, we make a higher low above this low here, okay? And then we continue up. Okay, so the first scenario that I said likely playing out, possibly a running flat for our fifth leg to the upside, okay? The alternate scenario was that we would lose these lows and make a lower low, and this is what we call an expanded flat. And both of those are equally valid. For those that don't use Elliott wave, you can just view this as a range, and we took the highs of the range in a deviation, and then we ended up taking the lows of the range in a much larger deviation, and then we went on for our final fifth wave to the upside, which we're now in, right? Keep in mind in the broader context, where we are right now is the final fifth wave of a cycle that started back at $3,000 in 2018. And this is the same cycle that I've been talking about for a very long time now. We're now working on this final fifth wave to the upside. And within that final fifth wave to the upside, we're working on another 5-wave move. So this is the other 5-wave move that we're working on. And this is the final fifth wave of the larger fifth wave. We'll make this blue. Okay, so this is what we're working on. And so this fourth wave, which ended up being incredibly brutal. Again, I expected us to get the running flat scenario. So if you go back, you'll see that I was bearish at 69K. I believe this to be a fake out because of the lack of impulsive price action that broke our highs. And I was looking for a move down somewhere between 30 to 40K. Obviously, those who are not there won't remember it, but at this time, everyone was screaming for 100K plus. The similarities of what we're seeing today versus what we saw in 2021 are incredibly alike. Everyone is screaming for 100K plus. Everyone is saying that, again, this was because of that whole 4-year cycle narrative. Back in 2017 of December, literally 4 years prior to us making this high, we had a parabolic blow off top, right? And because of this 4-year cycle narrative, a lot of people were saying that we were headed for another parabolic blow off top to 100K plus in December. Why? Because we did that literally 4 years ago, 2017 of December, we had a parabolic blow off top. Therefore, they argued 21 of December, we should be seeing another parabolic blow off top into December. This was November at the time. The consensus was that we are breaking all-time highs. We are ready to go to 100K plus. Anyone who says differently is delusional. They're crazy. They've lost it. They're bearishly biased. They're coping, etc., etc., etc. Everything that I'm hearing today, the sentiment was exactly the same. And you can go to my YouTube video that I shared, literally here, the title of which was "The Bull Market Top is 6+ months away." That was over here because I was calling for a correction down to minimum 30 to 40K down here. And so once again, the sentiment is very similar. And obviously we went lower. I wasn't expecting this very deep correction. But again, as you guys know, those who've been following me, we didn't hit validation. Therefore, even at 15K, I was very bullish. Some were looking for a move down to 10 to 12K, this region here. And I specifically argued that we would not go down that low because we would hit invalidation. And I said, we're bottoming here. We bottomed. We went on to then start our fifth wave to the upside, leaving everyone who was looking for 10 to 12K in the dust. And again, those of you who follow me are aware that I was calling for this. We're now in that fifth wave. We're now once again breaking prior all-time highs. We're now once again seeing people calling for 100K plus. We're now once again seeing people say that anyone who believes differently is delusional, has lost their mind, is coping, has ego issues, etc., etc., etc. And once again, I'm simply saying that I'm seeing the same thing that I saw on this move to the upside, which is a corrective move to the upside, a lack of impulsive price action to the upside, which indicates to me that just like we had back here in 2021, it indicates to me that the type of price action that we're seeing right now is ranging price action, and that we have not yet started our impulsive move. And with ranging price action, you tend to get deviations above the highs and below the lows of the range. And that's very normal to expect. When you get impulsive trending price action and you break upwards impulsively, you don't expect the fake out, you expect continuation. When you fail to move up impulsively and instead take the highs, usually what that means is that there's not actually momentum behind these moves, rather prices being lifted or forced to the upside to take liquidity before we revert back to the downside and take liquidity at the lows. That's all this argument is. Let's take a look at some of the lower time frames and talk about this impulsive price action that I've been referring to. We'll take a look at some lower time frame levels of interest. And again, areas where if I'm wrong, these are the levels that need to hold. And if I'm right, these are levels that we should see broken. But again, the idea, guys, here is that I do believe that we are likely forming a deviation above these highs. And a lot of alts look bearish as well. So that just kind of reinforces my thoughts here. And we'll talk about some alts here towards the end of the video as well, because they kind of go hand in hand with what I'm expecting here on Bitcoin. Again, the idea is, guys, that if we were seeing impulsive price action here, then these moves would be clearly impulsive. What we got here is the view of a clearly impulsive move to the upside. And again, we were very, very bullish at these lows because we saw an impulse. We bought these lows and we rode it up because we saw an impulsive move. Over here, we've had simply corrective moves to the upside. The idea behind an impulsive move is clear 5-wave subdivisions. You're looking for momentum behind price, meaning sharp legs to the upside, tight consolidations, and sharp legs up, not overlapping. If you're getting overlapping waves, then they're usually corrective. And you can just see that the way these impulsive moves look all the way up to the top. And you can also very clearly see the clear 5-wave subdivisions, the larger 5-wave subdivisions of this impulsive move as a whole that marked our top. Obviously, at the time we were watching this and we were calling this, live when it happened. This is like a textbook impulsive move. What you have here is you have not an impulsive move. You have a series of choppy moves up, grindy moves up, pull back, grindy move up, pull back, grindy move up, overlapping price action, overlapping price action. This is not impulsive. This is more of a corrective. And we'll take a look at the back-end data on Velo Data too, as we always do. But we have corrective price action moving to the upside, which again, if we get corrective price action moving to the upside, it typically indicates prices being forced to the upside to take liquidity before the correction continues, right? The correction at this stage was not complete. And again, a lot of people were saying this is a 5-way move to the upside. I very clearly showed how it's not. It's very clearly a 3-wave move. That's also why I was bearish at these highs when many were bullish. Many thought this was impulsive. Many saw the break of the highs and said, it's time to go. And I said, nope, it wasn't impulsive. It was corrective. The reason that I say all these things is not to somehow say that I'm always right. I'm absolutely not always right. I get things wrong all the time. This isn't to say that I'm better than anyone else or that I'm right and so you're wrong. This is simply to say that I have a different view and I have my reasons for saying the things that I say. It has nothing to do with me wanting to be right. I want to be right because I'm trading these moves, unlike a lot of people. And so if I'm right, I make money. If I'm not, I lose money. It's simple. So I'd like to be right for the sake of my own benefit to making money, right? At the end of the day. So this is, again, the reason that I keep reiterating this is just to show you guys that we're seeing the same type of price action here. And most people don't recognize this and they don't understand that. And so when they see a break of the highs, they say, why are you still bearish? We have bullish market structure. We broke the highs. You're delusional. That's all that I get on Twitter because people don't understand the difference between a trending market and a corrective move. Now, what if this is impulsive, right? What would the argument be if this was impulsive? What levels should we not breach if this is impulsive, okay? In my previous video, I talked about how we have potentially an impulsive move here. Like the one way that I could see this being bullish is if we're potentially printing an impulse here. And if that was the case, then this was the origin at the time. And I said 58K was the line in the sand for bulls, right? This level needs to be held for the bullish case to remain intact. So you can make the argument then that, well, this was a first impulse. People thought this was impulsive, not impulsive. Again, you don't have clear 5-wave subdivisions. You have very choppy moves here. And it was perp driven, which I'll show you guys on the back end in a little bit when we talk about that. But even if this was impulsive, what do you have that followed it? A super deep retracement that almost invalidated the impulse. Again, impulsive movements have momentum behind them. Because of the momentum, you tend to get shallow retracements. You don't tend to get so much overlap. Again, go back to our leg here. You can see that the moves up have sideways corrections that follow them, and then we have another move up, and then a sideways correction and another move up, a relatively sideways correction, another move up, sideways correction, move up, sideways move up, sideways move up. That's what an impulsive movement with momentum looks like. Not move up, almost fully retrace, move up, what I think will soon get a correction, I think down here again, almost fully retrace, or at least put in a deep correction here. That's not what an impulsive move looks like, right? And so even if you were to argue that this move was impulsive, what followed was pretty choppy, grindy price action. And then again, you can make the argument that, okay, well, this was choppy and grindy because this is part of a running flat, right? Like we talked about how you get a move above these highs and then you come back and make a higher low. So we can say, okay, this was corrective. And look, now we have another impulsive move. And to that, I'd say, okay, that's a potentially valid argument. I can see someone saying that this was impulsive, this was corrective, and this was impulsive. But guys, what do you have if this is the case? Once again, all you have here is a three-legged move. And we know that three-legged moves can most certainly be corrective. So again, we don't have enough to say that we're forming an impulsive break of these highs. Thus far, this could very well be, and for other reasons why I'll share in a minute, corrective and just a three-legged corrective move to the upside, a corrective move that's going to fail. Trump has won the election, and prior to the results coming in, everyone was saying that this would lead to a massive green candle and we'd be at 100K by now, but we've barely inched above $74,000 despite the very bullish election win based on the current administration in the US has been very anti-crypto. So the logic is that we now have a change in administration from Democrats to Republicans, and therefore a regulation should be more favorable to crypto, which I agree with. But that logic was then used to say say, well, if Trump wins, we're going to see a massive green candle, we're going to break out. And instead we got this candle just above the highs that's now finding resistance or potentially rejecting, right? So that is another sign of what I believe to be weakness, right? That despite a favorable win in terms of the election, we've barely cleared the highs. A couple of weeks ago, everyone would have said that we would have erupted to 100K by now. So in this case, the invalidation, and I shared this on Twitter already, but in this case, you could say that we should not go below this level here at 68.7K, because this move up looks kind of choppy, and I could even argue that this is actually a lower time frame impulsive move. It's not the prettiest, but you can see 1, 2, 3, 4, 5. So maybe this was impulsive, this was choppy, this was impulsive, but then that's still 1, 2, 3 legs to the upside. This is all corrective chop. This is a grind higher. This is the definition of choppy grind. This is not impulsive. So even if this was impulsive and this was impulsive, we're missing a fifth wave, right? That again tells us this is probably just a corrective move to the upside, right? So you have to kind of force the idea that we're seeing impulsive price action here. And even if you were to force the idea that we were seeing impulsive price action here, we still at the end of the day have 3 legs to the upside, which is corrective. For a proper trend, you need a series of higher highs and higher lows. That is where the logic behind a 5-wave impulse comes from, right? And I've talked about this in many other videos, but you have a series of higher highs and higher lows. You have a low, a high, a higher low, higher high, higher low. When you have 2 higher lows followed by 2 higher highs, that's a series being plural. This is a trend. This is a 5-wave move. Until you get that, you have 1, 2, 3. You don't have a series of higher highs and higher lows. You don't have a trend shift to the upside. You have corrective, choppy price action. And so if you're bullish, this level at 68.5K should hold. And again, when we were trading here at 73K a few days ago, I simply said that, look, if you disagree with me, then your time to long is between 65 to 69K with a stop loss below 65K. Because if you are right and I am wrong, then we shouldn't go below the start of this impulse that people were arguing is an impulse, right? So I said, this is the best place to look for longs. I said, I'm not going to long Bitcoin here. I did end up longing some alts because they looked favorable. But if I was wrong, I gave you the entry that you'd need to enjoy this upside, right? Now, the same applies once again to the scenario that we're seeing today. If I'm wrong, we shouldn't go below 68K. And if you really think that 100K is next, then you can take this as a trade if you really want to. You can long here with a stop loss below these lows, targeting 100K if you think that's next, and it's a 4-hour trade. Technically, that's a good risk-to-reward ratio for a trade. And that's also why I mentioned in a tweet some days ago that because I'm a trader, even though I don't think this is going to happen, this is a trade that I would consider taking. Because at the end of the day, if the risk-to-reward and probability of success adds up, as I've talked about in past videos, then it makes sense to take the trade, even if I know that I could be wrong, right? I think that we're not going to get this, but if I can win 4 times as much as I lose on a trade, then I would take it. The reason that I didn't take it is because I longed some alts instead. Again, I tweeted about that on Twitter. We'll go over that towards the end of the video, but it made sense to attempt a long here between 65 to 69K. And we bounce from that level. If we're bullish, then we should not revisit those levels, and we should simply make another higher low here, and then see another impulse, and another sideways, and then another impulse, and we should get something like this. So if you disagree with me, there's the trade to take. Don't worry about me, I'll be fine either way. A lot of people who are like, you're going to be sidelined, or you are sidelined, and I've said many times, guys, I've had spot since 3K Bitcoin. I'm not touching my spot portfolio. I keep the trading and spot portfolio separate, as should you, and there is no reason to not be holding spot at this level, because on the high time frames, as I've said for the last few months, I remain bullish and think 100K is next once this correction is over. That doesn't mean that I ignore the very real possibility of this being a deviation of the highs and us seeing one more major drop to the downside before we get that massive leg to the upside. In any case, guys, this is the way that you want to look at these things. The key area, as I previously said, is this dotted red line, or you can even take this little order block here. This should not be lost. This is the line in the sand for bulls. Now, if this level is lost, then it further confirms that this is going to be a deviation. I'd also like to share some other confluent factors that tell me this is likely deviation. If we go to the monthly chart, you can just see here in terms of what we call bearish divergences, RSI is making a lower high while price is making a higher high here. What that means is that if the next monthly candle that closes in 20 days closes above 71K, but RSI fails to close above 77, then we have the potential of a bearish divergence here playing out. And all that tells me is that the way that you're supposed to interpret this is that momentum on this rally, despite us making higher highs, RSI, which is a measure of momentum, is making lower highs. That indicates that there isn't real momentum behind this move yet, right? If we break out and continue higher, we'll ultimately end up breaking above 76, and that confirms the momentum. But right now, we're seeing a lack of momentum as RSI fails to make a higher high while price makes a higher high. Now, this bearish divergence has not been confirmed yet. It is always a chance that we will continue higher if price continues higher. But if we get a rejection in this area and we fail to push much higher within the next 20 days, then odds are that this is more likely to play out. And the reason that I preempt these things is because Oftentimes people say, well, you need to wait for the confirmation. Guys, oftentimes by the time you get confirmation, which in this case would be a break below this low right here at 60 RSI, by the time you get that confirmation that people are looking for, you've already missed a majority of the drop, and it's pretty much too late to do anything, because by the time we get this, you're seeing a candle like this. And at that point, you're too late. You've missed it, right? So again, this is not the only thing that I trade on. I wouldn't trade on something like this because there's a possibility that we move above these highs if price continues higher. But it's a factor that I look for confluence, right? If we were pushing up above these highs and RSI was making a higher high, say this peak was here and our current peak was above that, that's a very good sign. That indicates that this push higher in price is also seeing a push higher in momentum, and that's very bullish. We're not seeing that though. I'm looking at this on the monthly time frame because some people argue that for RSI divergences, if there's more than 14 candles in between the two peaks, it's invalid. I don't necessarily agree with that for reasons that we'll get into another day, but you can go down to the lower time frames and you'll see that we're seeing the same thing. Here's the 3 weekly. You can see once again, RSI making lower highs, price making higher highs. Now again, we have 12 candles here. So you'd argue that this could be very much valid as well. In fact, this is what we call a triple bearish divergence because you're measuring between the candle closes, not the wicks, because the RSI points that you see here are based on candle closes, not wicks. So you ignore the wicks. And you can see price made a higher high here, RSI made a lower high. That is a bearish divergence. That was actually confirmed on the next subsequent candle. Now, price is making another higher high above this higher high, and RSI is making another lower high below this lower high. So we call this a triple bearish divergence, right? Where you have not one bearish divergence, but a subsequent bearish divergence between the next 2 points occurring as well. So once again, not only on the monthly, but on the 3 weekly, not only do we have a confirmed bearish divergence, but we have what we like to call a triple bearish divergence with, again, RSI failing to make a higher high on this subsequent push above this one here. So there's arguments here that show, again, like I said, that if this was a move that was momentum based, RSI would reflect that. It's not momentum based. And that's present and inherent in both the corrective movement to the upside and the lack of momentum as shown by RSI. Why is that the case? Why do we see a move that looks nice and beautiful like this, very clear and clean? And why do we see a move that looks choppy like this, that's not very clear and clean at all? Let's take a look at the back end data to kind of explain why some moves are very clearly impulsive. And when we say impulsive and momentum based, I can tell just by looking at this visually. I can tell what it looks like versus this. Someone that's new to impulses and corrective moves and all these ideas and concepts may not understand this, because to them they see a high, higher low, higher high, higher low, higher high, higher low, higher high. They just see this as an uptrend, right? They don't understand the nuance behind it. But for that, we can look at our data in the back end, which I'll pull up right now, and I'll further explain why this is a momentum-based move, why it looks like that based on the data on the back end, and why this doesn't based on the data on the back end. So let's take a quick look at that. All right, guys, so this is Velo Data, and I want to just, again, show you guys the difference between a momentum-driven move and one that is corrective. And again, you can tell just by eyeballing it most of the time, but for those that are new and want something more concrete to go off of, there's some other metrics that we can look at to help us further establish when a move is impulsive or corrective. And I've previously talked about this as well. Again, the idea behind an impulsive move is that you have aggressive market buying, pushing price up. You have buyers rushing in, and there's momentum behind because there's insane demand pushing price higher. The logic behind a corrective move up is that price is kind of being forced to the upside, again, to grab liquidity or manipulate it to the upside. There isn't much momentum, and price is being lifted up through limit bids to get price higher and force people to cover their shorts or to jump into longs at the highs before a flush down to load up more and then get the real move to the upside. But what do you notice here between this rise to the upside and this rise to the upside, which is clearly impulsive, as previously demonstrated, right? What do you notice here between these two moves that's very different based on the data? And some of you may know the answer to this. For those that don't, you can see here that we had on this move up, which was the impulsive move, we had spot CVD rising. And again, what this indicates is we have market buyers stepping in here, driving price higher. What do we have on this rise? We have spot CVD declining. What does that tell us? That this move is not driven by aggressive market buying. Rather, it's driven by limit bids lifting price up. So limit bids being placed under price and kind of preventing price from dropping, forcing price higher, forcing all the people that had shorted above these highs with stop losses here to close their shorts, to get liquidated, and essentially taking liquidity above all these highs, which we knew was going to happen at some point. It was just a matter of when, and this happened earlier than I thought it would because I thought we'd save that for the real move up. But instead, we're forcing price higher, taking liquidity above the highs, while spot continues to sell off. This is the major difference between this impulsive move to the upside and this corrective move to the upside. And so again, I've said many times I want to see spot pushing higher here for a true impulsive price action. And that's just confluence with, again, the price action that we're already seeing that looks, again, very choppy choppy and grindy to the upside. But once again, the other confluent factor is we have OI at record highs. Again, if we've taken all of these highs up here, this is where shorts tend to close. So if we've taken all the liquidity here and we've forced a lot of shorts to close here, yet open interest continues to rise, and we know that spot is selling off. So if spot market buying is not pushing price up here, then we know that spot market buying is not responsible for this move up. And open interest is increasing drastically, which means that there's a level of perp participation here that's pushing price higher. And we can see that on every rise here, on every leg up, you get a perfect increase in perp CVD, which matches the increase of the rise in open interest. You can see that in every period here where we went up, right? You can see it between these two lines right here. You can see it between these two lines on this move up right here. You can see it between these two lines on this move up right here, right here. So every time that we see these punches to the upside, they are coinciding with rises in perp CVD, which means perp market buying, and subsequent rises in open interest, which means that levered positions are being opened here. And again, shorts have been getting squeezed all the way up on these rises. So yeah, some portion of this open interest is certainly shorts. I'm not saying it's not, but I'm also saying it's highly likely that a large portion of it is also longs, because we've had long participation on every rise here and we don't have spot market participation. So you have limit bids and you have perp market buys lifting price here. And then on these perp sell-offs that you're seeing in the spot sell-offs, as spot is dwindling, price is rising. Why is that? Because you have limit bids absorbing the selling. And why do they do that? So price continues higher. Why do they do that? To force these shorts to close. Why do they do that? To seek liquidity above the range highs before price is pushed back inside the range and pushed back down to the lows to take all the built up liquidity now on the other side. Okay, all this liquidity that we've built up in these subsequent higher lows and this corrective move up that we've made. So again, you can agree or disagree with me here. That's totally fine. I have no issue with that. But a lot of people calling me crazy the same way that they did in 2021 and insisting that I flip bullish when we've barely peaked above prior all-time highs. It's pretty crazy. So you can even look at the move here. Back in 2021, we had a 6% move above the prior all-time highs, right? And that ended up being a deviation. Today, we have above the prior all-time highs a 4% move above the prior all-time highs. And you have people telling me that I'm crazy for not flipping bullish here. This was a 6% move above the highs, deviation. This is a 4% move above the highs. Could very well be a deviation. The wild thing is that it's not even that people are saying that it's a possibility, but they see it unlikely. That I totally understand. It's that people are saying there's no way in the world that we're going to see a deviation here and a drop back below. It's because people are saying that we're headed to 100K and anyone that says differently is crazy when we've barely inched above the prior all-time highs. And so forgive me for not flipping bullish here when I'm not seeing any reason to, despite us breaking these highs. Again, I had expected that we would not break these highs. I had expected that if we broke these highs, it would be in an impulsive manner. That's why I said that if we manage to get above these highs in an impulsive manner, I'll flip bullish. But we haven't done that, so I can't flip bullish. It's not that I am stuck in my ways or that I'm refusing to acknowledge it. Again, no way in this world does it benefit me to be wrong and to continue to be wrong as we climb higher. That doesn't look good on my part, guys. That's not a good thing. If I actually believed we were headed higher, I would say it because I would not want to continue to be bearish as we climb to 100K plus. So it's like people think that I'm doing this for engagement farming. Guys, it doesn't help my brand or my reputation to be wrong. I don't be wrong intentionally to farm engagement. It's the silliest thing I've heard. People talk about Elon bucks. He's saying this because he's being paid on Twitter. I make like $150 every 2 weeks on Twitter. I spend thousands in trading fees daily. $150 every 2 weeks on Twitter is not why I'm saying the things that I say. Simply my views, but I'm getting met with so much pushback, so much hate when we're 4% above prior all-time highs. It's just absolutely insane. And it further strengthens my belief that this certainly is, in my opinion, more likely to be a deviation than a true breakout. In terms of depth of correction, moving back down to this consolidation, which is a massive area of high time frame support, is certainly not bearish on the higher time frames. And so that is again why I do believe, like I shared a chart on Twitter, that we'll see something like this. And that's the bottom line, is whether or not we get this correction here, it doesn't change the fact, in my opinion, that we're headed to 100K next. This correction doesn't change that. And that's the key thing that people need to understand. And I've also said people that don't trade need to focus on this big picture, that whatever happens here is noise before this big move. If you're not a trader, don't try to trade this. But if you are a trader, these are the types of things, these sort of deviations above the highs are where you get the most lucrative opportunities to trade, right? This is where you make the most money, when everyone's thinking we're going to go to 100K and you're cautiously bearish, and then we end up dropping 30 to 40%. Not only can you make money shorting on the way down if you know how to trade, but you can also make money buying this blood at a time where no one's going to be able to buy it because everyone went bullish here thinking we're going to 100K and refused to acknowledge the possibility of a correction like this. So everyone here is fully levered up fully exposed. And then when we drop 40%, now they're underwater in all their new buys and they have nothing to buy the dip with. So it's simply a matter of being aware of the other possibilities in this market and trading accordingly, right? So at the end of the day, guys, this is my perspective here, what I think is still most likely. And I've shared the levels at which, if we're bullish, we shouldn't go below. If we are bearish and we're going to see deviation, we should be seeing it here in the next few weeks. Again, in a perfect world, we get a monthly close just above 71, and then we break down the next month and close below to confirm that bearish divergence. But even if we don't, we have that triple divergence. 3 weekly closes in 21 days as well. Okay, so we're either going to get a triple bearish divergence on the 3 weekly as well as a bearish divergence on the monthly, or we're just going to SFP these highs and close below this month. But either way, within the next few weeks, we should get our deviation if we're going to. Again, we could climb a little bit higher, right? We talked about how in the last instance where we had this range and we got a deviation, we climbed 6% higher than the highs. We're currently 4% higher. So yeah, we could go a little bit higher. Maybe we hit 80K, right? But at the end of the day, until I see more concrete price action that supports the idea that we're going to see a major breakthrough, I'm definitely cautious. The alt charts that I'm looking at almost perfectly mirror what I'm seeing here with Bitcoin. That is deviations above the highs and looking ready to nuke again. I've publicly traded a lot of these alts here. I've publicly shorted them and I've publicly closed them in profits, and people still kind of losing their minds to the fact that I'm bearish here when I'm very transparent. I share most of my trades publicly. Whenever I share that I'm entering a trade, I share when I close it. I've shared so many trades over the last 3 months and 80 to 90% have been closed in profit. People that don't actually trade continue to argue about why I'm wrong, despite me getting these consecutive wins trading the market, right? So here's total 3, and this is a measure of alts excluding Bitcoin and Ethereum. And again, a lot of people getting bullish here when we're still making lower highs on total 3, unlike Bitcoin. And all we've done here is gone back above the prior range highs after putting in a range low. And again, just like Bitcoin, I think what we're probably forming here is some sort of a deviation above these highs for a move back down to these lows here. And we'll talk about certain alt charts here that kind of mirror this and look just like this. And again, what do you see here? This is not an impulsive move. This is the definition of a corrective structure. Like, it doesn't get any more obvious or clean than this. Look at the difference, guys. With these moves to the upside, very clearly impulsive, and this mess of chop that is supposed to be impulsive, which is very clearly corrective off the lows. And again, the argument can be made that we started an impulse here as well. That's the argument, that the impulse has started midair. But again, based on everything that I'm seeing, I think more likely we're just taking these highs in a corrective move before coming back down. Well, let's take a quick look at some alts. We'll take a look at WIF. And again, WIF is one that I publicly shorted here at $3 and I publicly closed, right, for some profits down below. Again, when we were here at $3, everyone was calling me crazy, and what followed was a 36% drop and everyone was silent. It's funny again because people that don't trade continue to tell me why I was wrong here for being bearish, and then we had a 40% drop to the downside. And I was traveling at the time, so unfortunately I couldn't monitor, so I just closed my shorts and slight profits, and I said I'm looking for a move back to this area here. When we moved up to take these highs, we failed to tap this area, which was the ideal short zone. So I said I'm looking for a move back to the upside along with Bitcoin, and if we can get here, I'll short it again for that full move down to sub $1. And again, if people are calling me crazy, yet despite people calling me crazy, we're still sitting some 16% below the last time they called me crazy. Again, I try to tune out the people that don't know what they're talking about, but it's just insane on Twitter right now, like the amount of people that have an opinion that don't actually do this for a living. It's just crazy. So in any case, this is WIF. There's other coins like BONK. BONK I'm still long on. So this is BONK Bitcoin, and the reason I longed BONK was because we hit this major area of demand on Bitcoin that preceded this massive move to the upside. I'm looking to take profits into this red zone, which is an area of resistance. You'll notice this just makes another subsequent lower high on the BONK Bitcoin chart. Ultimately, I think we're going to break down below this level here. This chart is a little bit misleading because I don't think it shows complete price history. So you have to go look at BONK on DEX Screener or DEX Tools, which shows you complete price history. But you look at the BONK USD chart, it looks the same, right? So we hit this D through demand. This is where I longed it, targeting these untapped highs, taking profits when we get here. And I'm hoping we can get here before Bitcoin drops. That's why I think, with the next few days, I'm hoping that BONK can reach that upside target. I'm hoping that WIF can reach its upside target in the next few days before the Bitcoin drop. But again, you can just look at BONK here and consistent lower highs. Now, BONK actually has consistent higher lows as well. So you can make the argument that we have resting liquidity on both ends of this. So we're kind of consolidating here, and we're obviously going to break in one direction or the other. But again, this chart doesn't show complete price history, and you need to go on DEX Screener or DEX Tools to see. But if you look at the complete price history of this chart, it looks something like this. This is what the chart looks like if you look at its entire price history. And not only that, but you have 1, 2, 3, 4, 5, and now we're seeing this consolidation at the highs after 5. We move to the upside. In my opinion, is high time frame distribution. And again, after moving up so much off the highs, a pullback something like this would not be crazy because it's still, you know, in the grand scheme of things, a pullback just to the larger fourth wave, which is again normal. But people don't see this because they're not looking at the complete price history. And so they're thinking that we've already basically been consolidating since inception and we're ready to break out. But reality is this is probably a massive top forming, right? And again, that's why I'm looking to take profits on my longs into supply, which looks like this. And so you clear all these highs, you take profit into supply, and then where do you target? You target the lows, right? Just like Bitcoin. So BONK looks like that. Ethereum is another one. And Ethereum is one that I talked about months ago, right? We have all these built up untapped lows. I actually longed Ethereum as well at 2400s down here. I already took profits, but I think we're going to reject somewhere up here. This is where I wanted to short. But again, Ethereum, like Bitcoin, you're pushing up into this major area of supply. And this area is actually very significant. This is actually a very high time frame area of supply or resistance. This is the 3 weekly chart. So you can see we consolidated here for 3 weeks and then we broke down. Now we've left a series of untapped lows and we're pushing back into that area of resistance. So again, Ethereum pushing into resistance. CRV is another one that has hit my upside or almost hit my upside target. It hasn't hit it yet, but again, this is the same chart that we've been trading on CRV for weeks. I've shared 3 to 4 trades, reduced risk above these highs, add on risk below here, do nothing in between. We're about to hit the place where we are supposed to reduce risk. Again, this is for a trading portfolio. My spot portfolio I don't touch, so I'm holding my spot portfolio regardless of what happens on CRV here. But again, CRV also approaching range highs after taking range lows into an area of resistance. So all this, again, tells me that all these alts that I track, most of them that I'm watching are approaching areas of resistance, while Bitcoin is just barely teetering above prior all-time highs, just 4% above prior all-time highs, with so many people calling for 100K plus here, despite the lack of impulsive price action, despite us barely grinding above these highs in all these favorable market conditions. I'm still getting people that are commenting about the ETF inflows because we had $1 billion of ETF inflows at these highs and how I'm crazy for being bearish when we have $1 billion of ETF inflows. And again, those of you who watched my last YouTube video recall that every time that we've had a local top, it has been marked by massive ETF inflows. So the argument that we're seeing major inflows at these highs is bullish is a flawed one because all the data points to major inflows at a local high being bearish. So again, I'm not saying that correlation is causation. I'm not saying that the inflows at the highs is what causes the bearishness. That's not what I'm saying. All I'm saying is that if you're going to argue that record high inflows or big inflows is bullish, then the data doesn't support it, right? The data says that, you know, whether or not there's a causation here, causation effect, there is not a correlation with high inflows and bullish price action. There is a correlation with high inflows and local tops. So long story short, guys, you can flip bullish here all you want. That's fine. I'm not going to flip bullish because anons on the internet who don't trade and don't do this for a living are telling me to. It's not going to happen. I'll flip bullish when it makes sense to do so. And if I have to do that higher up, that looks worse on me. It's not a good thing if I remain bearish the higher that we go, but I can't objectively flip bullish here with what I'm seeing. It's just not going to happen because it doesn't make sense to me to do that. And in a few weeks, this does end up being a local top and we end up crashing down. You guys will then understand why I've taken this approach and why I'm not flipping bullish here. Because at that point, the same way people wanted me to flip bullish immediately on a break of 71K, and I refused to because I wasn't seeing what I wanted to see, and then we followed that with a $5,000 dump back to 66K. The same situation here, guys. I will happily take my time to confirm that we have a bullish break, to confirm that we are indeed breaking out to the upside, to confirm that we are indeed starting the next leg to 100K plus. I will happily be patient and wait to see what I need to see so that stuff like this doesn't happen, where you flip bullish out of eagerness to please the crowd, or you flip bullish out of pressure just to see us drop down $5,000 2 days later. I'm not one to flip-flop just to want to be right? I'm going to flip when I see what I need to see, and if that's higher, so be it. As I've said many, many times, no reason to not be holding a ton of spot here. So even if I have to flip bullish higher, my spot bags will be way up, and I'll then be able to take a trade with more clarity at that time to make money on the continuation higher. Again, I've been long on some alts. I'm still long on BONK. I closed Ethereum alts in profit. I closed AAVE longs in profit. Here's AAVE, and AAVE also, just like all the others, pushing into major high time frame resistance after taking our range highs. You're seeing this across the board. Let's go to the monthly on AAVE. You can look at this in many different ways, but you can just see that this major area of support that once lost acted as resistance. And if I remove everything else from this chart and you just look at one thing, let it be that. Let it be this level. Area that acted as support for 1, 2, 3, 4, 5, 6, 7 months that was lost and then acted as resistance for 1, 2, 3 months before we completely broke down the $45 from 200. Guess where we are now? We're pushing back into it. This is the wrong time to be getting euphorically bullish. And I'm saying this with AAVE, but it applies to every chart that looks like this, which is most of them right now. The entire space is getting insanely bullish at the most logical place for us to see a rejection. And if we get a rejection here, it's going to be ugly. It's going to be very ugly. So yeah, I don't mind taking my time, despite the noise on Twitter, to flip bullish when I think it makes sense to do so, despite us being higher than originally anticipated, not expecting us to break 71K despite us pushing higher. We're still, again, only 4% above the prior all-time highs. The last time I saw a similar PA like this, we were 6% above the prior all-time highs before we collapsed. So I'm not in a rush to make that decision. And if and when the time comes, I will make it.
One more thing that I want to kind of bring your attention to and kind of show you guys some similarities once again with what I believe to be the 2021 structure where we cleared our highs and then came down, and also the current structure that I believe is playing out in the same way. Back here at around 40K, and interestingly enough, this corrective structure did the same thing that I think we're doing now and that we did back in 2021. And interestingly enough, this structure is also, just like the other two, a fourth subwave. So if we look at our larger third wave here that we got, this move is a fourth subwave. That was the second, this was the third, this was the fourth, and that was the fifth. So here's a third example of specifically a fourth subwave in which we seemingly broke out above the highs, and then ultimately it failed and we melted all the way back down to the range lows. This particular time as well, once again, I would bearish at the highs as well. I'm calling for a move down to the lows. And once again, people looked at this and viewed this as a proper bullish break and were expecting continuation. And what followed was a sell-off back to the lows. If you recall, this was when the ETFs were launched, right? So again, just like we see every time, there's some sort of news event or narrative that people will use to justify a breakout, even when the PA, being corrective to the upside, doesn't necessarily support that. So we'll just go down the lower time frames to help you guys see this corrective PA that I'm talking about. Once again, I mean, it's very clear. You have obviously overlapping moves on the way up. These are not impulsive moves. You get these spurts of kind of vertical price action, but the grander thing that you see here is a lack of consistent impulsive price action. And these spurts, as you can see here, often get deeply retraced or fully retraced. And so this indicates a corrective move to the upside. And so once again, even back here, we had the ETFs approval. The ETFs had launched or about to launch. And so once again, everyone was saying the ETFs are going to launch. This changes things. We're going to break out to the upside. And you'll notice here that we got from the highs of the range, we got about 9% higher than the highs before we came back down. So again, in 2021, we got 6% higher than the range highs before we melted back down. Over here, we got 9% higher than the range highs before we melted back down. And this is also why I can't give you guys like a set number above 74K where I say that there's an invalidation, because by their very nature, a deviation, well, there's flexibility as to how high we can go, right? The point is, if you're not getting impulsive price action on the rise, again, it's likely corrective, which means it's being forced up and the rally will likely fail. So people ask me for a number. Just like I said, 71K was, ideally I didn't want to see 71K broken. And I said, if we break that in an impulsive manner, I have to flip bullish. We broke it, but we didn't break it in an impulsive manner, so I can't flip bullish there. And then we cleared the highs, which is the highs over here are equivalent to 73.8K. We broke the highs. Again, we're not seeing impulsive price action. So people want me to say that I'm bearish. They want me to say that I'm shifting bias here, but I just can't, because I know for a fact, as we've seen in these two instances that I'm sharing with you guys, and probably many more in history, whenever we get corrective breaks of a range high, typically these are fake outs or deviations, and typically the rallies fail and we come back down. And then this paired with, of course, the way that alts look, all pushing into resistance. I think Doge is probably the only exception. Doge is performing very strongly, but again, if the entire market's pulling back, Doge is not going to be immune to that. But aside from Doge, all the other alts that I've covered have simply hit my local upside targets or resistance zones. But the point being that this move, just like we saw here, just like we saw in 2021, we can certainly go above the highs, and as you've seen, as much as by 6 to 10% easily, and that can still be a fake out. So those that want me to flip bearish because we've hit 75, 76K, which is just a few percent above the highs, doesn't make sense based on my system and what I'm seeing in the data that I have. So just wanted to add that in here for some additional context. With that being said, guys, that's it for this video update. I hope you guys enjoyed it. If you did, please like, share, and subscribe, and I'll catch you guys in the next one.